All right, so we're going to talk about how to find the very best market to trade right now. I think this is a pretty timely topic because the end of 2022 is coming, and maybe you're already thinking about your new plans for 2023. And part of that could be also the question, what market should I focus on in the 2023? What should it be that I should follow? And I'm going to give you an answer in today's episode. Actually, it's quite easy. All right, so I think that the basic question for many traders is basically this. Should I focus on currencies and Forex, or should I focus on gold and metals, or should I focus on indices, or should I focus on energies? And this is a timeless question. Doesn't matter whether you're thinking about it for the upcoming year or right now. This is very timely thing every single day. And of course, we have other markets like meats and grains and sorts, but these are usually not as popular as these 5 categories. So what I decided to do is to focus on these 5 categories only, go through them and tell you what would be my analysis, how I would do an analysis to clarify which market to focus on right now. So how do we perform this analysis? How do we find out? Actually, the process is quite simple, and the process goes like this. You need to ask a question: what would happen if you buy or sell every single day? Because if you think about this in mind, you can learn a lot about each and every market. And that alone, this question alone already suggests how to execute this research properly. So what is the process? The process that I did and that I recommend to everyone is basically this one. First of all, I downloaded daily data for the entire each of the sectors that we discussed for every sector: metals, indexes, currencies, and energies into an Excel spreadsheet. So what I really did, I downloaded each market separately. I downloaded for energies, I downloaded all the commonly traded futures like natural gas, crude oil, heating oil, gasoline. For indices, I downloaded E-mini S&P 400, 500, E-mini Dow Jones, E-mini Nasdaq, and the Russell 2000, E-mini Russell 2000. And then for each market, for every single day, for the last 15 years, I calculated the relationship on a daily data between open and close to find out what is the daily movement on each and every market. But then what I did, I combined these markets together to create an average for the entire sector. So once I calculated for every single market the average daily move, then I combined these markets together into appropriate sector to see what is an average trade for each and every sector. And I did this for five years and 3 years, and I'll explain to you why, okay? So let's talk about these results and let's have a look how can this help you to really pick up the right market category to trade right now. So as I said, here is an average of, here is the average of every market category for the last 15 years. And one of the things that this average tells us very, very precisely is, by the way, what is the volatility of each market sector as general. And this is very important because in general, if you want to make money, you need to trade in markets with volatility. There's very little money to be made in markets where there's no volatility. But if we have markets with sufficient volatility, it is way easier to really trade these markets and make profits. Now, for the simplicity, I plotted this just for the long side. It doesn't really matter whether it's long or short to see what the average volatility is. That alone, we're just about the average trade. But what matters, if it's long or short, we will see whether the particular sector has got rather a long or short bias. So what's really going on here? So first of all, we can see that currencies have a little bit in general, and I included Australian dollar versus USD, British pound USD, Japanese yen USD, Swiss franc USD, and Euro currency USD futures pairs. So first of all, we can see that on average, the currencies as the entire group is really rather on the short side, because if we calculate the average trades for every average movement in average trade for every day on average on all these currencies, we can see that it's a losing number. That means that markets go overall slightly down instead of up. That's why it is red. It doesn't mean profit or loss. It just means that if the number is black, it means that there's overall up tendency. If the number is red, it means there's overall down tendency. Okay, that's all what it means. Now, the first thing which is really interesting is to see that the very lowest volatility we have during the last 5 years in currencies. So personally, I'm quite surprised why so many traders are really concentrated on Forex, because through my analysis, this is the least volatile market, and we want to be where the movement is, where the action is, where the volatility is. So currencies do not really show profound and big volatility or big enough of a movement to make a lot of money. However, there's a different story with energies, which overall long-term are a little bit more short-sighted as well. Not right now, I'll get back to it. Indexes, which we know that historically are very bullish, mostly going up. These two have really high average trade per day. The category as general, of course, in each category we have stronger and weaker markets. But it's definitely outperforming currencies quite profoundly. And the last one is metals. And we can see that metals, they have all right, the average trade on this during 15 years on daily data for this category. It's quite all right, but it's not as high as indexes or energies. So in this case, we pretty much know already that based on the 15 years view, we would rather focus on energies or indexes. This is where we have most money. This is where the action is. However, that would be a little bit, like this is like the overview. This is the big picture. This is looking up from the gallery. However, we want to also get closer to the market and have a closer look. And that's why I also always include 3 years period to see what it looks like in more recent markets, if there's some significant change, if this assumption is still valid. And this is really interesting to see what happens here. So first of all, currencies got a little bit more volatile during the last 3 years. So it's 0.62. So the number here looks already better. However, so did energy. Energy got profoundly more volatile as well, from 14 to 76. So the ratio is way higher in favor of energies. And we again can see that energies is where the action is. This is where the money is. This is the place where there are big movements and we can make a lot of money. We also got quite a good increase in metals from 314 to 462, but again, not that much of a big improvement compared to currencies or energies. So still, it's all right, but we have better alternatives. Now, the most interesting part is indexes, and the indexes got close to zero. Now, it doesn't mean that the volatility is gone completely. It rather means that after a long time of a bull trend, we got way more number of bearish days. We got more down days. We're in a bull trend, bear trend right now. We're in a downtrend. So that's all is reflected here in this number. And it doesn't mean that indexes wouldn't be good anymore. I think that indexes are still great, among the greatest. And I will share more about indexes in upcoming episode in our Index Mastery November month, which I will tell you about at the end of the show. So please stay tuned. Do not leave this show prematurely. But overall, indexes, if you've been trading indexes on the long side for a long time, this number is saying that there is something shifting and it's not as much of a trend as it is used to be. We're in a bear trend and we need to be way more careful about our long sides. Again, I'll get back to this in the Index Mastery month, November. So, the thing that is really important here is that we can see, and this is the important one picture that has not been changing through years, is the volatility of energy. Yes, we got overall from downtrend way more to uptrend. Especially last 3 years, we know what all is going on with energies, especially right now. But the point is, the volatility is there. The volatility is energies. And if you don't believe me, just please open your charts, have a look on natural gas, crude oil, compare it to other markets, and you will see repeatedly this is the most volatile sector right now at all, period. So right now, if I would have to decide, I would want to make as much money as possible. I would focus on energies. And actually, this is an example from my hedge fund. And in our hedge fund, we have 259 energy strategies. We have 102 on natural gas, 51 on crude oil, 36 on heating oil, and 70 on gasoline. And that's not only because energy markets are very good for breakout trading. You can create terrific strategies in energies with breakout trading. But that's also because these markets do move. Ask breakout traders, Laura will tell you that big portion of profits come usually from energies. And you can also create some spectacular strategies on energy. So for example, this one is on natural gas. The strategy trades both sides, long and short. You can see this is true out of sample, again, from our hedge fund database. Very profitable. During the last 10 years, about 100K. So that means about 10,000 US dollars per year on one contract in general. You will get better strategies, you will get worse strategies. This is just an arbitrary example, but it's a good example that strategies on energies are good, profitable, and it's worth to focus on them. Now, I also have to warn you because energy strategies can be a little bit tricky. They can be really volatile. They can really... you can also have big losing periods and it can be super frustrating. So with this volatility, you can have a lot of ups and downs and, sideways times like this one here, which obviously can be a little bit nerve-wracking. But overall, the profit is still in energies. There's a lot of profit in energies, and if you cannot afford to trade them, think about micro futures. We're getting micro futures on energies now. Is the same story. Very good markets that can move. That's the most important thing. These markets do move, and we need movement to make money. By the way, this example comes from the book, The Breakout Trading Revolution, where I share way more strategies. Where I also share my breakout trading formula, which helped me to develop this particular strategy. So the conclusion really is that the best market to trade right now, and probably for years to come, still would be, for me at least, energies. If you're after profits and if you don't mind a little bit more of heat and volatility. I would like to encourage you start working on your first natural gas or crude oil or any other energy sector strategy as soon as possible. Because if you start right now, remember, a year from now, you might wish you had started today, and that's always very important to remember. So do not procrastinate, focus on these markets and try to develop a strategy in energies as soon as possible. It will never be a bad choice in your portfolio, even if you would have just one natural gas or any other energy strategy. It always will be a good bet, and you will see what these markets can do. My second favorite choice would be indexes. I still have indexes, although the data here are a little bit, have some quirks and hurdles that I was talking about. Indexes are still the most popular category, and that would be my second choice, and that's also what I'm going to talk about the entire next month of November. So November, we are calling November the Index Mastery Month, and we prepared Index Mastery here on YouTube with you, with a lot of data, with a lot of charts, with a lot of interesting, mind-blowing stuff that will help you tremendously to improve your index breakout strategies. And on top of that, the show will be every week. So in November, every Tuesday, we will talk about indexes and index mastery, and you will learn a lot about indexes. So don't forget, my pick would be energy sector, but my second pick would be indexes, and there's a high probability already do function in indexes, and you already are in the index markets, which is great. And next month we will talk a lot about this one as well. Okay, I hope you like this episode. Please subscribe so you don't miss this amazing index mastery month. Do not miss it, really not. And give us thumb up if you like this episode. And we're again sorry this couldn't be live, but we promise we will be live next time as soon as Andrew feels well again, and we will be fully ready. So see you next month on the Index Mastery, and meanwhile, happy trading.